With Maasry of Goldman Sachs. So let's listen in to his market view. Lata, over to you.
Well, one of our most watched pre-budget series is what we call What the World Wants from India. Foreign investors over the years watch the Indian budget very closely to check out for reform initiatives, not just for the current year, but for the entire term of the government. And of course, the current budget is going to be very closely watched also because it comes on the heels of a very big and unprecedented policy initiative, the demonetization or the currency swap, which changed 85% of India's currency. Joining me now on this very special series is Maasry, who is head of EM portfolio strategy at Goldman Sachs International. Maasry, thank you very much for joining us on this show. Well, first up, a more general trend question to you. We have been seeing from November 8th a long DM and a short emerging market trade. It seemed to fizzle out a few days back with the dollar receding from that 103 levels. But should we worry that the first half or even the entire 2017 will still be a long DM, short EM trade?
Yes, hi. Thank you very much for having me. I guess the first question I would say is, in general, it's been quite supportive of equity markets globally, part of the whole reflation and cyclical uptick that's supported also by actual fundamental data. On the point of allocation between the developed world and emerging markets, we do think that actually starting the year, the reflation trade will continue, which does favor the developed markets. Let's say in the first half of the year, as rates rise, we do think the dollar will continue to strengthen. But looking at the second half of the year, we think actually fundamentals in EM are starting to look quite a bit better, notably outside of China. And actually, we think it will be quite a good second half for emerging markets.
Okay, but in the first half itself, we have seen a decent amount of outflows from November 8th onwards from emerging markets. And India has had more than its share of outflows. How does that trend look to you? Say in the first quarter of 2017, will FIIs continue to pull out of EMs, especially India?
So I think across other emerging markets, actually the flow trends look a little bit better in the recent term. And as I said, on an absolute basis, we actually do see emerging markets doing relatively okay in the first half, perhaps not as well or not as strong as developed markets. I think in the case of India, it was a little bit idiosyncratic given the demonetization, which did sort of spook some of the foreign investors. But I do believe that that's quite a short-term phenomenon. And again, as we look at the second half, we'll get back to sort of a better emerging market story. I think sort of in the very near term, of course, the market is very focused on policy, political uncertainty, certainly around the U.S. and potential trade policy. That tends to spook investors about emerging markets as well. But presumably we will get a bit more clarity on this issue in really the very near term, in the coming weeks specifically.
Yes, clearly there has been an underperformance of India vis-a-vis emerging markets and perhaps a little more outflows out of India because of demonetization. Is that underperformance at an end, or will it continue?
So that, I do think, is closer to the end. I think the economic impact of demonetization was a little bit unclear, of course, from a couple months ago. But already the very recent data looks like the deceleration has already started to improve. That is to say, the latest batch of data was a little bit more supportive in India. And therefore, I think foreign investors will look again at the underlying fundamental trends. And frankly, more broadly across emerging markets, I think one of the larger complaints over the years has been the lack of reform. And in India's case, this is, I think, a medium to longer term positive story. We just needed to get over the very short term uncertainties about economic impact, which I do think are receding.
Okay. Well, let me ask you about the budget itself. What are you expecting?
I'll I'll defer to our Indian economists about that. Again, I'd say broadly across emerging markets, there actually has been some concern about fiscal issues. However, those I think are much larger outside of India, more in places like Latin America. And in general, we are quite supportive of EM sovereign debt. But in India, we don't see it as being a particularly stressful issue.
Okay. Well, actually, the problem with India has not really been fiscal deficit or excessive government borrowing. In fact, the government has decided to borrow less than it originally planned. It has cancelled some of the borrowing programs. But the worry has been with respect to the interpretation of certain tax rules, especially with respect to indirect transfer of assets. Has those concerns hit you? Are you worried about those interpretations?
So frankly, not so much. I mean, clearly there are uncertainties. There always have been, particularly for foreign investment coming into India. But what I would stress as a broader strategist, the most important factor that we see moving the emerging markets in the current cycle has absolutely been the underlying growth story. And it is in that sort of theme that India really has outshone its peers. We do think it will continue, not just at the macro level, but actually if you look at underlying earnings. And one of the specific themes in India, I think, which is important to note, has been the ongoing NPL cycle, which really started basically a year ago. And that is, again, unique because when you look at other emerging markets that have seen excesses in the domestic sort of cyclical areas, particularly the banks, they've not gone through an NPL cycle. And ultimately, I believe this paves the way for a stronger domestic growth story. And that, frankly, is what equity investors, but as well emerging market investors, tend to look for overweight positions.